A retired school teacher in Ohio filed her paperwork exactly 1 week late, just 7 days. And because of that 1 week, her county locked in a higher taxable value on her home for the entire year, a mistake that ended up costing her family more than $4,000. Nobody called to warn her. Nobody sent a reminder. The deadline simply passed, and the door closed behind it. If you own your home and you are over the age of 65, there is a good chance you are eligible for a property tax freeze or exemption right now, one that could lock in what you pay for years, sometimes for the rest of your life in that home. But here is the part almost nobody explains clearly. This benefit does not show up on its own. You have to know it exists, and you have to file for it inside a very specific window. Miss that window, even by a few days, and in most states, there is no going back for that year. In the next few minutes, I am going to walk you through exactly how this works, the 3 different tools your state may be using to lower your bill, the real deadlines for this year that catch people off guard every single season, and the one mistake tied to income limits that makes thousands of homeowners wrongly assume they do not qualify when they actually do. Stay with me until the end, because I am also going to show you a detail almost nobody talks about, the one that affects what happens to this protection after a spouse passes away. And it is the kind of thing that can quietly cost a family thousands if nobody ever mentions it. My name is Nolan Carter. I spend my time studying the property tax rules, exemptions, and filing deadlines that counties rarely explain in plain language, the kind of detail that sits buried in a government website until someone actually goes looking for it. I am not here to sell you anything today. I simply believe that if a benefit legally belongs to you, you should know exactly how to claim it. Before we get into the details, if you find this useful, take a second and subscribe. I put out this kind of research regularly, the deadlines, the forms, and the quiet rule changes that affect what stays in your pocket, and most of it never gets covered anywhere else in plain, simple language. Subscribing means you catch these updates before a deadline passes you by, not after. And stay through to the end, because after we go through everything you need to know, I am going to hand you a simple, free checklist you can use this week to find your exact deadline and get your paperwork moving before it is too late. Let us start with the basics, because this is exactly where most of the confusion begins. There are 3 separate tools your state might be using to lower or freeze your property tax bill, and most homeowners have only ever heard of one of them, if they have heard of any at all. Understanding the difference matters because each one works in a completely different way, and knowing which ones apply to you is the first step to actually claiming them. The first is the Homestead Exemption. Think of this as a straightforward discount. Your county takes a fixed dollar amount off the assessed value of your home before it calculates what you owe. In some states, that amount is $10,000. In others, it climbs much higher. It is the most common form of relief, and in many places, it applies to every homeowner, not just seniors. The second is the Senior or Over 65 Exemption. This one sits on top of the Homestead Exemption, and it is where a lot of the real savings hide. Once you cross that age line, many states allow you to file for an additional reduction, sometimes doubling what you already receive. And here is what surprises people the most. In more than half of the states that offer this, there is no income test at all. Turning 65 and filing the form is the only requirement. Yet a huge number of eligible homeowners never file simply because nobody ever told them this second layer existed. The third tool is the one with the most long-term power, the assessment freeze. This is different from a discount. A freeze locks in the taxable value of your home at whatever it was the year you applied, and it stays there. Your neighborhood can boom, home prices around you can climb year after year, and your tax bill stays calculated on that frozen number. For someone who has owned their home for decades in a neighborhood that has quietly become more valuable, this single filing can be worth far more over time than the exemption alone. Now here is the part that trips people up more than anything else on this entire list, and it applies to all 3 of these tools equally. None of them are automatic. I want to say that plainly because it is the single most expensive misunderstanding in this entire topic. Your county does not look at your birth date, notice you turned 65, and quietly start applying a discount. There is no employee whose job it is to review every homeowner's age and adjust their bill. You have to file the paperwork yourself, and in most states, you have to file it inside a specific window. So let's talk about that window, because this is where the real danger lives. Deadlines are not the same everywhere, and the gap between states is bigger than most people expect. In Florida, The homestead filing deadline sits at March 1st. In California, the window closes by mid-February. In Texas, homeowners have until the end of April. In Arizona, seniors filing for the valuation freeze have until September 1st. And in states like New Jersey, the senior freeze reimbursement application can run as late as November, but it is tied to the previous tax year, which confuses people every single season. Here's why this matters so much. If you assume your state works the same way a neighbor state does, or the same way it worked when your parents filed decades ago, you can walk straight past your own deadline without realizing it. And in the vast majority of states, once that date passes, there is no retroactive fix. You do not get the money back for that year. You simply pay the full bill and wait for the next cycle to try again. Picture a man I will call Robert, 71 years old, living outside Phoenix. Robert assumed his freeze filing worked the same way his property insurance renewal did, sometime near the end of the year, no rush. He never checked the actual date. By the time he called the assessor's office to ask, September 1st had already passed by 17 days. Nothing dishonest happened. Nobody did anything wrong. Robert simply lost an entire year of protection because he assumed instead of checking. He filed the following year without any trouble, but that one missed window cost his household real money he can never get back. That is the exact kind of gap this video exists to close for you. Before we move into the piece that trips up even more people than the deadlines themselves, the mistake tied to income limits, take a moment and subscribe if this is helping you. This channel exists to catch exactly these kinds of quiet deadlines and rule changes before they cost you money, not after, and the only way you see the next one in time is if you are already subscribed when it goes up. Now let's get into the myth that convinces thousands of otherwise eligible homeowners to never even apply. Here is where a huge number of people talk themselves out of money that was already theirs to claim. The word assistance does a lot of damage in this conversation, because the moment people hear that a program is income-based, they make an assumption in their head and move on without ever checking the actual number. They picture a program meant only for someone barely scraping by, and if they own a paid-off home, drive a decent car, and live comfortably, they assume it could not possibly apply to them. That assumption is costing people real money, because the actual income limits are often much higher than anyone guesses. In Illinois, the senior freeze exemption income limit sits around $75,000 in household income, a number that keeps rising, specifically so that a normal cost of living adjustment on someone's Social Security check does not accidentally push them out of the program. In New Jersey, the senior freeze reimbursement allows household income up to roughly $150,000. In New York, the enhanced senior exemption allows income just over $110,000. These are not small, restrictive numbers designed to exclude the average retiree. They are built wide enough to cover the vast majority of people watching this video right now. So here is the correction I want you to make in your head immediately. Do not decide at your own kitchen table whether you qualify. That decision belongs to the application, not to your assumption. Look up your actual state's limit, compare it to your actual household income, and let the paperwork tell you the answer instead of guessing. The people who assume they earn too much are, more often than not, the exact people leaving money on the table. Now, let's talk about the second mistake, one that is even more unforgiving than the income myth, because this one has almost nothing to do with money and everything to do with timing. In most states, the senior exemption and the assessment freeze are not something you can file for whenever it's convenient. They are tied to a specific window, and that window is usually the year you first become eligible, meaning the year you turn 65. Misfiling during that window, and in many states, there is no retroactive path back to recover it. You do not get to call 3 years later and ask for the missed years to be refunded. The savings from those years are simply gone. Think about how easily this happens. Turning 65 is already a year full of paperwork. Medicare enrollment, Social Security decisions, maybe a move, maybe a health scare, maybe helping a grandchild. A one-page property tax form sitting on a county website is easy to lose in the noise of everything else happening that year. And because nobody calls to remind you, the silence feels like permission to wait. It is not. It is simply a deadline nobody warned you about, ticking down quietly in the background while the rest of your life happens in front of you. Let me put a number on what is actually at stake here, because it is easy to treat this as a small, forgettable form until you see the real math. Depending on the state and the specific program, a senior exemption or freeze can save a household anywhere from several hundred to several $1,000s every single year. Stretch that across 20 years of retirement in the same home, and the total protected can range from tens of thousands of dollars on the modest end up towards six figures in high-value markets where home prices have climbed sharply. That is not a rounding error. That is the difference between a retirement where property tax increases quietly eat into your budget every year and one where that particular number stays fixed no matter what happens to home values around you. Now, I want to bring you to a layer almost nobody talks about, because it does not show up until the worst possible moment right after losing a spouse. Here's the situation. A married couple files for their senior exemption or freeze together, exactly the way they are supposed to. Years go by, the protection works exactly as intended, and then one spouse passes away. In many states, that protection does not automatically continue for the surviving spouse. The exemption or freeze can be tied specifically to the person who originally filed, and if the right follow-up paperwork is not submitted, the surviving spouse can quietly lose the benefit at the exact moment their household income often drops, and they can least afford the increase. This is not a rare edge case. It happens constantly, specifically because grief is not a moment when most people are thinking about county tax forms. A widow or widower is dealing with a funeral, an estate, a mountain of other paperwork, and the property tax exemption is the last thing on anyone's mind. Then a year later, a noticeably larger bill arrives, and nobody understands why until someone finally traces it back to a filing that quietly lapsed. The fix is usually simple where it exists. Many counties allow a surviving spouse to carry the exemption or freeze forward, but it typically requires notifying the assessor's office directly and submitting a short form, sometimes alongside a copy of the death certificate. It does not happen automatically. Just like the original filing, it depends entirely on someone knowing to ask for it. Take a moment now and subscribe if you have not already, because this is exactly the kind of detail that never gets mailed to you, never gets explained at the funeral home, and never gets brought up by anyone except someone who has gone looking for it specifically to warn you ahead of time. Now that you understand the three tools, the deadlines, the income myth, and the surviving spouse gap, let's bring this together into exactly what you should do this week, along with a free resource that makes checking your own state simple. Before we get into your action list, there is one more layer worth knowing, because for the right homeowner, it can matter more than everything else combined, and almost nobody brings it up in the same conversation as exemptions and freezes. It is called a property tax deferral, and it works completely differently from everything we have covered so far. Instead of reducing what you owe, a deferral program allows you to postpone paying your property tax bill altogether, in some states in full, in others partially, while a modest interest rate accrues on the unpaid balance. The county does not forgive the debt. It simply waits and collects when the home is eventually sold or passes to your heirs. For a homeowner sitting on a paid-off house with real equity but a tight monthly income, this can free up hundreds of dollars a month without touching a single other part of the budget. It is not the right fit for everyone, especially if leaving the full value of the home to family matters to you, but for someone choosing between paying the tax bill and paying for medication or groceries, this option existing at all can be the difference between staying in the home and being slowly priced out of it. There is also a layer that gets missed constantly because people assume it only applies to one category of homeowner at a time when it can actually stack. Many states offer separate exemptions for veterans and for homeowners with a qualifying disability on top of the standard senior exemption. If you are a senior who also served, or a senior managing a qualifying disability, you may be eligible to combine more than one of these programs, and the combined effect can be significantly larger than any single exemption on its own. The mistake people make here is assuming a program is either for seniors or for veterans, as if only one label can apply to a person at a time. Check every category that could reasonably describe your situation, not just the first one you think of. Now, here is something worth doing regardless of which state you are in, because it costs you nothing and it takes only a few minutes. Call your county assessor's office directly, not a general county line, but the assessor specifically, and ask 3 questions in this exact order. First, ask which senior property tax programs your county currently offers. Do not ask if you qualify for one by name, because if you guess the wrong name, you may be told no when a different program with a different name would have said yes. Ask broadly first. Second, ask what the income limit is for each program they mention, and compare it honestly against your own household income before ruling anything out in your head. Third, ask what the filing deadline is for this specific tax year, and whether that deadline is fixed or whether it shifts depending on when you first apply. Write down the answers. Do not rely on memory a week later, because these details are exactly the kind that blur together once you hang up the phone. I also want to give you something extra, since I promised you a bonus at the start of this video. I have put together a simple one-page checklist that walks through exactly what to ask your assessor, what documents to bring, deed, proof of age, proof of residency, and income documentation, and a place to write down your specific state's deadline once you find it. It is designed to take the guesswork out of this entire process. So instead of trying to remember everything from this video, you have one page that does the remembering for you. It is free, and the link is in the description below this video if you would like it. One thing worth being honest about before we move into your final action steps: none of what I have shared today is personal, legal, or tax advice. Property tax rules vary significantly by state, by county, and sometimes even by individual municipality within the same county, and the specific numbers and deadlines mentioned here can shift from year to year. Always confirm your exact situation directly with your county assessor's office or with a qualified professional before making any filing decisions based on what you have heard in this video. Here is why all of this matters beyond the dollars themselves. For a lot of retirees, the fear is not really about the tax bill in isolation. It is about what a rising, unpredictable bill does to a fixed income over time. When you do not know what next year's number will look like, it is hard to plan, hard to relax, and hard to feel settled in a home you have lived in for decades. A freeze or an exemption does something quieter than just saving money. It gives you a number you can actually count on, year after year, in a part of your budget that used to feel entirely out of your control. And that predictability is really what this entire topic comes down to. Not a loophole, not a trick. Simply a benefit that was written into the law specifically for homeowners in your position, sitting there waiting for someone to ask for it correctly and on time. Now let's turn everything you just learned into a simple, specific action list you can start on today. Here is exactly what to do this week, in order. First, find out which of the three tools your state actually uses: the Homestead Exemption, the Senior Exemption, or the Assessment Freeze, since most states offer at least one and many offer two or all three stacked together. Second, call your county assessor's office directly and ask the three questions we covered: which programs exist, what the income limits actually are, and what your specific deadline is for this tax year. Do this call this week, not next month, since deadlines in several states fall earlier in the year than most people expect. Third, do not disqualify yourself in your head before you check the real number. If you assumed in the past that your income was too high, go check again, since these limits are adjusted regularly, and the line that excluded you a few years ago may not be where it sits today. Fourth, if you are widowed or you know someone who recently lost a spouse, ask specifically about carrying the exemption or freeze forward. This is the detail that gets missed most often, precisely because it surfaces during a year when nobody is thinking about property tax paperwork. Fifth, gather your documents now instead of waiting until the deadline is close. Your deed, proof of age, proof of residency, and any income documentation the program requires. Having these ready removes the single biggest reason people miss a deadline, which is scrambling for paperwork at the last minute. And finally, grab that free checklist in the description below. It walks through every question to ask, every document to bring, and gives you a simple place to write down your own state's exact deadline once you find it. So none of this depends on memory. None of this requires a lawyer, an accountant, or a single dollar spent. It requires a phone call, a short list of documents, and knowing the deadline before it passes instead of after. That is genuinely the entire gap between the homeowners who keep this money every year and the ones who quietly hand it back to the county without ever meaning to. If this video helped you see something you did not know about your own home, do one simple thing: share it with another homeowner in your life who is over 65, a neighbor, a sibling, a friend from church. Nobody is going to mail them this information, and you might be the only reason they find out in time to file. And if you want the next deadline, rule change, or quiet update caught before it costs you anything, subscribe to this channel. That is exactly what I cover here, plainly and in time to actually act on it. Thank you for watching, and I will see you in the next one.